The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Hello and welcome to Squawk Box Europe. I'm Karen Shea with Ben Boulos. These are your headlines. US President Donald Trump defends his war on Iran in an exclusive interview with CNBC, accusing Tehran of exploiting previous administrations and insisting markets welcomed the intervention.
They've had their own way for 47 years. Like if you're a spoiled child and you've had your way for many years with your parents and all of a sudden they come down hard on you, it takes you a little while to get used to it.
Slowing US jobs growth poses a fresh headache ahead of the midterms, with just 57,000 new jobs added last month as markets dial back rate hike expectations on both sides of the Atlantic.
Europe's major benchmarks rally, with the Stoxx 600 closing at a fresh record high and futures pointing to further gains.
US President Donald Trump has defended the war in Iran and his family business dealings in a wide-ranging exclusive interview with CNBC. Speaking to Joe Kernan in the Oval Office, the US leader also accused the Fed markets, or discussed the Fed markets and AI. On Iran, Trump gave his view on how former administrations have handled the situation.
I think I've done much more than reciprocal.
Right, but you want diplomacy. You want diplomacy at this point.
Look, I built the military in my first term.
Right.
I'm using it in my second term. When I went in, otherwise we wouldn't have. And that's after Biden gave so much away in Afghanistan. He just said, leave it. We left brand new military vehicles. We left tanks. We left airplanes. These people are crazy. They don't know what they're doing. And there was no reason to do it. Right. Getting out of Afghanistan was fine, but they should have kept Bagram, the Air Force base. They could have kept it very easily. We would have gotten out with dignity and strength. That we shouldn't have been there in the first place. Or we could have won. I would have won it. I would have won it or gotten out, but I would have won it. But they just teetered around. You know, it's interesting. So we're in the war, and it's really the denuclearization of Iran. This is not a war per se. This is the de-nuking of Iran. You can't let them have a nuclear weapon. And I'm doing it for 3.5, 4 months, right? Look at Venezuela. That was a one-day war. And we've gotten our money back many, many times over for the cost of the war. But in a certain way, I'm doing just as well with Iran. It's a much bigger, more complex situation. Our relationship, by the way, with Venezuela is great. They're doing better than they've ever done with oil. The big companies are moving in, and we're getting a good chunk of it too, as we should. But with Iran,
what if they jerk you around? What if they jerk us around again with either the Strait or with the, you know, they know the midterms are coming?
Because they've had their own way for 47 years. Like if you're a spoiled child and you've had your way for many years with your parents, and all of a sudden they come down hard on you, it takes you a little while to get used to it. They've had their way for 47 years. They pushed everywhere. They were known as the bully of the Middle East. They pushed the countries around, and they pushed the United States around because we had presidents that weren't willing to do. Look, Barack Obama paid them to try and keep them in line, gave them $1.7 billion in cash. You remember that because you reported that. They put it on a beautiful 757 Boeing. They took all the seats out, and they stuffed it with green cash from Virginia, Maryland, and D.C. The banks had no money left. They literally took and they delivered it to Iran. And they took out satchels and sacks of money. In addition to that, they paid tens of billions of dollars. And you know, they got a lot of nuclear research and a lot of weapons and a lot of missiles and an enemy. They actually went on the other side. And how a Jewish person can vote for a Democrat is beyond me.
Let's check in on the markets. And this was the picture at the close of the Thursday session, indeed the close of the week. It's a shortened trading week in the US because of the Independence Day holiday on Friday. This is how the markets closed off Thursday. You can see a bit of a rotation out of tech. The Nasdaq falling 0.8%, the S&P 500 closing flat, and the Dow jumping 1.14%. The big factor driving the equities higher with the Dow, those expectations being dialed back of the Fed's rate hike path, given the much lower than expected job figures that we got for the US and the downward revision for previous month, that really trimming those bets on the Fed's plan to, or possibility of hiking rates. Indeed, now traders increasing the bets on a hold at the coming month's meetings. Let's have a look at how things are playing out in Asia. A bit more of a mixed picture it was, because the equity markets there started on the back foot. They have recovered some of the losses despite that tech sell-off that we saw in the US. We've seen a rebound, particularly on the Kospi. That's had a really volatile week. It has recovered 6% there in the current session, but still on course to end the week lower after we saw some sharp moves in the heavyweights on the index. SK Hynix and Samsung, they've recovered some of their stock price as well in the current session, but still having suffered some big losses earlier in the week as we saw a rotation out of tech and into other sectors. Some strong gains on the Nikkei, some strong manufacturing purchasing managers index data out of there, suggesting a bit of a rebound in Japan. Let's have a look at what's being expected when European trade gets underway for Friday. And again, gains to be found across the futures, indeed, including the Stoxx 50. We saw the Stoxx 600, the European-wide index, close at a fresh record high. So we'll keep an eye on that. As ever, we are looking ahead, counting down to the European market open in less than an hour from now. Karen.
Indeed we are. Let's get into the numbers on the jobs front, though, because the macro backdrop having an impact on markets now as US jobs growth in June slowed sharply, with the economy adding only 57,000 non-farm positions, well below expectations. While the labour force participation rate is at its lowest level in 5 years, figures for April and May were also revised lower. Yesterday's jobs report represented a break from a run of strong gains and should reassure policymakers that the labour market is not fueling inflation. The odds of the Fed holding rates at its September meeting have risen, with a roughly even chance of a hold and a hike. Michael McGowan joins us now, managing partner at Parstone. Michael, thank you very much for joining us. The market has reacted. Some say it's an overreaction to the jobs number, but we were talking about a day earlier that the Fed has shifted its eyes now more to the inflation side than the employment side of its dual mandate. What do you make of how we digest these numbers on the jobs front?
Yeah, good morning. I think this is sort of a classic case of bad news is good news for the Fed. I think our view coming into this actually was that market expectations for a Fed rate hike were probably a little bit overstated. We're obviously going to see some headline inflation come down, but the Fed's real problem is kind of the core inflation rate. And so I think the jobs number buys the Fed time. I think it allows the Fed to say, we certainly don't need to be in haste to make a decision. And, I think prior to Chair Warsh's first FOMC meeting, I would have said the most important thing was going to be the next 3 inflation prints. And I think subsequent even to this jobs print, I think my response would still be the most important thing is going to be the next 2 or 3 inflation prints. And I think the data is going to guide the Fed. Again, I think our base case is a little bit closer to we're probably going to stay at a hold, but I think the path has narrowed and a hike is certainly on the table.
Are we missing anything in the weeds on the data here? Because if we just explore where the weakness came through, it was leisure and hospitality employment that was down 61,000 in the numbers. This is also an area where typically you would have seen some higher activity. You've got the World Cup taking place. June is a stronger month when it comes to travel, restaurants, hotels. Is this a feature where we're now seeing the American consumer cut back because of the costs that they're bearing at the pump, some uncertainty in terms of consumer spending?
There's definitely some bifurcation in the consumer spend, but I think the real-time data coming out of the banks around credit card spend is actually that the U.S. consumer is actually holding up relatively well against this backdrop. I think maybe the more interesting thing is if we rewind the clock maybe 4 or 5 months ago, I think a 57K print on the non-farm payrolls would have actually been considered decent, right? I mean, there were a lot of economists talking about somewhere between 0 and 50,000 jobs being what we needed to create to have just break-even level unemployment. And so I think it's more about the last couple of months being unusually strong given the economic backdrop. And this is a bit more of just a moderation toward what I think a lot of people thought was going to be trend payroll growth here. And so again, I don't think it's, I don't think it's going to drive the narrative for long. I think in a month's time, we'll see this change. The jobs numbers have been very volatile. And so we're not putting too much emphasis on this single data point.
Michael, what do you make of the volatility we've seen in the tech sector this week, and particularly the analysis that there has been around about the AI trade and whether this is a wobble, whether this is just part of the natural ebb and flow when a sector has had such solid gains and a strong performance in recent months? What's your take on it all?
Yeah, I think the short answer is you definitely just saw a little bit of volatility coming into a quarter end, which is not surprising, especially given the gain that you've had. But I think the framing actually that I like is, we hear a lot about AI and the self-reinforcement capabilities of AI, but I actually think we're in sort of an economy and a market that is a little bit sort of AI self-reinforcing in and of itself. You've got the big AI CapEx boom. That's driving economic growth. Over 50% of the upside contribution to Q1 GDP was AI driven. That's offsetting some of the cyclical weakness. That's overriding even some of the geopolitical concerns. And it's propping up the consumer because it's creating stock price movements higher. That's pushing up consumer net worth. That's allowing the consumer to sort of continue to spend. The hinge really, though, is, are we going to get productivity from all this AI investment? Is that CapEx going to pay off? And I think the short answer is, we believe we're still very much in kind of the early innings. I liken it to the J curve, but we're going to have to see that prove out. But I don't think that's something that's going to prove out over even 1 or 2 quarters. I think that's something that's going to prove out over the next several years. So I think these trends are a bit more durable, but I do think we're going to see a lot of volatility, especially as the headlines change from week to week, month to month.
And how do you think all of that is affected, particularly the big sort of CapEx spending by the hyperscalers, when we've had a week in which the Federal Reserve Chair, Kevin Warsh, at the meeting, the ECB forum in Sintra, told a CNBC panel that anyone who thinks that he would be comfortable with seeing inflation stay significantly above 2% will be disappointed. It's a much more sort of hawkish tone than I suppose some would have liked to have heard from him. How does that affect all of this?
Yeah, I think 2 interesting points. One, if you look at Kevin Warsh's background, it shouldn't be a surprise that he's a bit of an inflation hawk. I think there's also a question around how much of that is rhetoric versus what he actually thinks we should do over the coming months. Obviously, he introduced 5 new task force. To some extent, that might be buying him some time to get collaboration within the Fed to align on policy going forward. And so, I think it's certainly playing into the situation here.
I'll ask you about Elon Musk and some of his ventures, because SpaceX is, of course, a huge dominant feature on the market. Stock still holding up. Tesla also came to the market yesterday. The deliveries beat, but the stock has been down fairly aggressively in after hours. Can you piece any of this news flow together for us?
Yeah, I think, obviously SpaceX with the largest IPO in history is a big deal. Tesla is an interesting one where, they actually beat in terms of number of deliverables by a pretty wide margin and had one of the rougher days they've had in some number of years. Again, I chalk a little bit of that up just to sort of near-term volatility that we're seeing in the markets. I think on the SpaceX side, we've been fortunate to be investors there for a number of years on the private markets. We've seen some of that appreciation. And I think what markets are going to shift to going forward in the near term certainly is going to be index inclusion, shares coming off unlock. But I think, again, the real story is for investors who are thinking about, long time horizons, 2, 3, 4, 5 years out. I think this sort of near-term volatility is part and parcel for just the market we're in, and really what we're focused on is sort of that longer-term trajectory in front of these businesses.
There's an interesting article I was reading this morning saying the stock market loves SpaceX, but the bond market isn't sure. And that is the point. There's questions around whether the capital raise was necessary, but also the deep investment requirements from here. It feels like it's going to be a bumpy road for these big companies turning to the bond markets to try and pad out that capex requirement. Would you agree with that?
I think that's a bifurcated answer. So I think a company like a SpaceX, certainly, pricing at sort of the wider end of investment grade, despite having an investment grade credit rating, obviously a big capex spender, but not a massive cash flow generator. To some extent, you could take an Oracle on the hyperscaler side. You could put that in the bucket. But I think if you look at the other big AI capex hyperscaler spenders, a lot of those businesses went from a net cash position to, yes, they have some net debt, but net debt to EBITDA is still well below sort of the average of the S&P 500 company. And so while the size of the debt issuance looks large, it's not that big in comparison to the cash flow that they're generating. And so I'd say it's a little bit of a bifurcation, but for the core hyperscalers, it's certainly less concerning from our perspective.
Michael, thank you very much for taking the questions and joining us today. Michael McGowan, Managing Director at Pathstone.
Right, let's turn to energy markets, where all eyes are on OPEC Plus ahead of this Sunday's high-stakes ministerial meeting. The decision on August output levels comes against a backdrop of continued disruption in the Strait of Hormuz, despite an interim deal between the US and Iran. Dan joins us with more on what we can expect and how the markets are faring after that signing of the MOU. Dan?
Good morning to you both. Well, reports indicate that 7 key producers led by Saudi Arabia and Russia are now locked into what would be effectively rubber stamping an August production increase of 188,000 barrels per day. Now, that mirrors the exact supply boost we saw in June and July as the alliance continues rolling back voluntary cuts. It will be the 5th largely symbolic increase since the start of the Iran war. Now, the real wildcard remains the critical global choke point, which is the Strait of Hormuz. And despite the MOU between Washington and Tehran, maritime traffic has been effectively a total roller coaster here. Ship tracking data shows 34 vessels crossed the waterway on July 1st. We are still a long way off the post-MOU peak of 70 crossings recorded back on June 24th and well below the pre-war peacetime baseline of 120 ships a day. We're keeping a very close eye on the UAE in particular. Crude and condensate exports rocketing to a record high last month. The massive push follows Abu Dhabi's exit from OPEC on May 1st as it now sprints to monetize its massive capacity investments. And attention is also on how fast Gulf and OPEC producers can recover, with production levels tumbling during the conflict. Now, among them is Iraq, which is really feeling the fiscal squeeze. The country's oil ministry aggressively lobbying OPEC to raise its own production quota to help dig the country out of its wartime economic malaise. And Baghdad has been pushing back against rumors, officially denying it has any immediate plans to follow the UAE out of the OPEC door. Well, last month I asked the OPEC Secretary General what he would say to those questioning the group's unity.
We are unified, and our death certificate has been written many times before, and we have emerged stronger than before, and we will emerge strong and continue to be stronger. That's what I would say. We have been tested time and time before, and we have always emerged as strong. And OPEC's strength is important for the global community. OPEC's strength is important for consumers just as much as it is for producers, because OPEC has played a significant role in stabilizing markets.
OPEC is not dying.
Absolutely not. Not in my time.
Coming up on the show, US President Donald Trump defends his family's crypto dealings in an exclusive interview with CNBC. We'll have the details. Plus, we bring you my conversation with Robinhood CEO Vlad Tenev and his thoughts on agentic trading along with IPO underwriting. And we'll cross over to France, where Charlotte will be speaking to Portugal's Minister of State and Finance. That conversation, 8:30 London time.
Executive Decisions is the new podcast from CNBC, where I ask powerful leaders about their decisions that changed everything. I'm Steve Sedgwick. Here's Miss Jo Malone, CBE.
I started that first business of skincare. That's when I knew that I was in charge of my own life. And that's when the entrepreneur really, although I didn't know what the word entrepreneur meant, that's when the entrepreneur really took hold.
That's Executive Decisions with me, Steve Sedgwick. Get it wherever you're listening to this.
Welcome back. Business leaders, academics and policymakers are meeting in Aix-en-Provence this week with topics such as European economic stability high on the agenda. Charlotte is there among them and joins us now. Charlotte.
Thank you, Ben. Well, the who's who of French business and politics attending this conference here in Aix-en-Provence, including, and I have with me now, Philippe Aghion, the 2025 Nobel laureate in economics, professor at the Collège de France and INSEAD, and of course, member of the Cercle d'Economies who host this conference here in Aix every year. Philippe, thank you so much for joining us.
Pleasure to be with
this
you.
morning. So you had a chance to discuss and host a panel here in Aix with the French Prime Minister, Monsieur Le Cornu.
Yes.
And it seemed to be a big event because, of course, there is a
Very
big rendezvous
important.
next year here in France, the presidential election, and he made some announcements.
He made very important statements. He said first, you know, France, you need to be patriotic, the patriotism. Reference to De Gaulle and the 1960s, where France was very dynamic, very important. And he also mentioned AI. He mentioned the fact that AI will, of course, create disturbances on the labor market, and you need to move towards a flex security system. But he also said that there might be emergence of, you know, wealth distribution will be a problem. Power and wealth distribution may be an issue. And there he made a very important proposal. And the important proposal is that the very rich, we will ask them to put part of their wealth into a foundation, a public foundation, and that will be co-managed with the states. And that's so that the rest would be, you would have, you know, advantageous, you know, tax rate. But it's really it's an alternative to the Zuckman tax that he proposed yesterday. And I think that was very important because he should concern to, you know, we need the whole of France. We need to move to the AI revolution. We need to innovate, but all together. Social dialogue, big redistribution, and very much the Gaullian and la promesse de la République, as we say in French. And those were very strong messages that he delivered yesterday. So it was like a presidential agenda.
And while
so that was very important
because
people discovered Le Cornu, who can be a president.
So you think
many people saw him as a president?
Because there's a lot of potential presidential attending here.
He will not tell now if he's, and I don't know. But to many people, he appeared like a president.
And while these topics are raised, creating a fund to fund AI, etc., while he made some of these announcements, these proposals of a fund for AI, he did yesterday.
Yes.
And we know this is important. You're an economist. You know this is important for the future. Does that win you any votes? Because this is not in the public conversation. The big fear for people, for voters, is job destructions.
No, but
so
that's right.
You're
but
an
that's why
expert on this.
So that's why you also mentioned the flex security. You see what I mean? So that means when you lose your job, you know, before you find a new job, you are being accompanied, you are being protected. And so those are the values that he stressed. You see what I mean? That you will never feel abandoned. We will always be there. Education, health, flex security, those are the values that he's putting forward. Okay? And also you may have the concern that some people will become billionaires and it will all be at your expense and to their advantage. I am there to make sure that things will be fair. Voilà. That was very much the patriotism and fairness. And those are the values that he pushed very strongly. And I can say that nobody so far has done what he's done yesterday.
But because you are an expert on innovation, that's where you work on specifically. On AI, at the moment, there's a mix of course, excitement, you know, productivity gains and fear. Where do you stand on that debate?
On that debate, I believe that AI has big growth potential because it makes it easier to produce goods and services and to produce ideas. You know, many new ideas are a recombination of old ideas. With AI, you recombine much more. And it's true that it will destroy some jobs. But it will also create new jobs, because new ideas are new jobs. And firms that adopt AI become more productive, therefore more competitive, and therefore the world market demand for their products increases. So the whole thing is to manage the job destruction and job creation. That's where you need the flex security system. But my view is that if you put the right institution, competition policy to make sure that it's not only one actor that monopolizes everything and discourages everybody else, what happened with IT, you see. If you have good competition policy, good industrial policy to build computing centers and data centers, good education and good flex security, with those, you can harness the power of AI.
You need economic planning and kind of dirigism around the AI revolution.
You need the appropriate institutions and policies to harness the power of AI. AI can take you to the worst or to the best, depending on the institution you put in place. But yesterday, the Prime Minister pointed, flagged, I would say, or spotted, I don't know what the right word would be, the institutions that we would need.
And we hear from a lot of players in the AI field in the US talking about a universal basic income, that maybe we should tax these big AI companies to give back to society, in their words.
Alors, it could be that the foundation that the Prime Minister talked about could play partly the role of financing flex security, or partly also, you see what I mean? But I think it's personally, that's my own view. I think that it's not good just to give an income to do nothing. I think it would be very important that you either train or work. And I think it's very important, because you need a social interaction. I think it's very bad if you are at home seeing nobody, because then you become excluded and you feel out of society. That's very important, to be inclusive. You are inclusive through the education system, or to making sure that any individual has the right, is entitled to either training or a job, or both. And that, I think, that's what's important. So I'm not against the idea of universal, but it should be, the contract should be that you train or work, unless you're disabled, of course.
But is Europe still in the race? We know the race very much led by the US and China. We've seen the SpaceX IPO. We see potential other IPOs going there. A lot of money, a lot of funds going to the US, a sort of acceleration of movement going that way. So can Europe still stay in the race?
Yeah, so I think the Prime Minister mentioned that yesterday as well. We would encourage savings that stay in France or in Europe.
Okay.
And that are invested on high technology.
There are plenty of projects. Unlocking the savings in Europe. That's
exactly.
a report.
The idea would be that there would be a premium to investing your savings in France and Europe on a high-tech project. And there are many, high-tech projects in Europe, and we are very good. There are many people who are really good at developing AI and health, AI and education.
There are the seeds of this, but then eventually it goes somewhere else. The money goes somewhere else, or the unicorn doesn't
because there is too much red tape for venture capital. We don't have enough institutional investors, and institutional investors have, life insurance. They invest because they're very conservative. They go to the US. So that's where you need to have, incentive policies to make sure that at least part of these savings are invested in Europe.
And do you think that this can be part of the conversation for the election next year? Because we know a lot of talk is about immigration.
It will be part.
Do you think the public is ready to hear that and actually take part of a complicated conversation?
It's a Gaulian moment. We said, you want education for everyone, health for everyone. You want to be protected. Of course, you need, of course, a smart immigration policy, which you have the tools to manage it. Of course, that will be part. But you want to enter the 21st century fully. And France, we will be the pillar of a new Europe, a Europe that wakes up to technological progress.